Taxation by passport in Europe is getting closer every day, and in fact, many people are already considering renouncing their citizenship in exchange for a more free one. In France, an amendment was approved in the National Assembly on the 17th of October 2025 that talks about imposing a 10-year rule for French citizens who move to very low tax countries, maintaining tax obligations there if certain conditions are met. This is unprecedented for citizens of the European Union. It is quite normal for citizens of the US. For now, perhaps France will begin, then it could initially expand to Spain, Germany and Belgium because they are truly very aggressive, and the entire European Union bloc may end up with this measure imposed. Many countries already have measures to prevent you from moving to certain places considered tax havens, others have exit taxes. Now what they seek is to keep charging you even if you leave, that is, to try to hand your money by any means. But since we already have information that is being approved, we can begin to explain in detail how everything will initially take shape as they have outlined. During the 10 years following your departure from France, if you are French, you exceed an income threshold around 240,000 euros per year, and you move to a country whose tax burden is more than 30% lower than France's one, France will keep you under tax obligations there. It refers to income that exceeds 5 times the PAS, Plafond Anual de la Seguridad Social, of Article 241.3 of the Social Security Code, I think. The PAS for 2026 has been announced at 48,060 euros, 5 times the PAS equals 240,300 euros. Now then, this is triggered if you have lived 3 years in the last 10-year period. It recognizes a credit for the tax paid in your new country to avoid double taxation if there is a treaty in force. Imagine a French taxpayer with a net employment base of 300,000 euros. He moves to a country that taxes that income at 10%. He pays 30,000 euros abroad. In France, on that income, a theoretical assessment would result, but the credit for the 50,000 euros is deducted up to the limit of the French assessment. If the French assessment is lower than 30,000 euros, the credit is capped at that amount. There is no refund on the checks. If the French assessment is higher, the difference would be paid. They don't charge you twice. Treaties plus the credit avoid double taxation, although there may be a top-up if the French burden exceeds the foreign one, or indeed you could be charged twice if there is no treaty. As you have seen, for now, most people will be exempt because the vast majority don't earn that annual amount. However, it is proposed for the rich. Most people vote thinking it targets the rich, and little by little that amount will go down once it is approved. I don't think they will require the chosen country to be within the European Union, which would seem more aggressive to me, but rather that this has a similar tax burden. If the personal income tax is 25%, for example, then it should not be more than 40% lower than that. I really still don't know how it will be applied 100% to trusts, okay, or to some foundations. We have to see it in practice. Changes are indeed coming. Of course, it will not be as strong as in the US because the US controls the US dollars, obviously, and has the FATCA law. All the banks in the world must report to the US if a US citizen opens a bank account there, and on a bank form you indicate whether you are a US citizen or not. What I do see is that as they are going to impose the digital euro, analyzing everything carefully, I think it will work out for them. Unfortunately, and since most people within the European Union are usually paid in euros, being digital, they will have everything under control, and it will be more difficult to avoid this tax if it applies to you and you want to evade illegally under their legislation, especially if you continue to be paid in that currency and not in another. I believe that over the coming years, many citizens of the European Union will obtain new citizenships, new passports, not yet to renounce, but to have a second option in case the first option sinks. Spanish citizens are obtaining Argentine, Mexican, in the future Paraguayan or Panamanian citizen, or even in some cases Serbian citizenship by exception. Passport can be purchased in quite a few places, but I would really choose places where you could actually see yourself living long term. I have many clients who have bought passports in the Caribbean, such as St. Kitts and Nevis, but who do not really see themselves living there. Others take the Mexican one because even knowing the country's problems, they can indeed see themselves living there in the future or spending time there. And renouncing a European Union citizenship is not as extreme as renouncing US citizenship, because you can always re-enter the European Union, the Schengen area, with some type of residency for stays, or a golden visa without needing to live there. Let us suppose you are Spanish, you renounce your Spanish citizenship and obtain the Mexican one, the Serbian one, and the Turkish one. You can always obtain a golden visa in Portugal and then simply stay in Spain for 6 months and a year, and stay in Portugal for 6 months a year, and be a tax resident in whichever country claims you, because you keep your assets there conveniently, where you pay little tax or not at all. You would be a tourist in Spain, no longer a citizen. Even so, you would later obtain Portuguese citizenship after 5 years if you want Portuguese citizenship and to become a European Union citizen again. It is much easier to live in the European Union compared to living in the US after renouncing citizenship, because the later one is one of the hardest statuses to recover today. If we speak only about taxes, by simply changing tax residency and not being caught by the bracket, perfect, you have solved it. Another matter is whether you actually like the potential additional measures beyond taxes, if any. I have some clients that they don't care nothing about the taxes or the new taxes by citizenship, but they don't like the possible new measures that will be added to the citizenship they own. Many Ibero-American clients who seek to take Spanish citizenship but fear that Spain will now seize all their assets forged abroad do not face such a problematic scenario, since they can obtain Spanish citizenship by being residents for 2 consecutive years. Exit tax doesn't apply because they don't need the threshold. They can use the Beckham law and enjoy improved taxation compared to the average resident and citizen, and since they have not spent 3 years in a 10-year period, they already have everything sorted. Looking at the landscape of citizenship by investment, permanent residencies by investment, fixed tax like in Greece or Italy, and new golden visas, many people think that in the end, the wealthy will leave Europe temporarily, renounce or not their passport. In the future, new golden visas will appear when countries need capital, like Romania this month. They will pay something akin to a subscription for limited taxes, while the rest of the people who have been unable to make these changes or unable to build wealth will remain inside paying abusive taxes, or else outside still paying during those 10 years, but unable to apply for those potential golden visas if they want to return to their countries because they will not have the capital. These are merely comments I read from high net worth individuals, their thoughts and opinions, since this affects them directly. I'm not saying this will happen. I agree with some things and disagree with others. I should mention that an adopted amendment in the Assembly is not law enforced by itself. It must pass the rest of the budgetary circuit, passage through the Senate, the debate, back and forth of the text, possible joint mixed committee to reconcile versions, a potential 49.3 procedure when the government forces adoption of the budget text without a vote unless there is a motion of no confidence, review by the Constitutional Council, and finally promulgation, a publication in the official journal. Until then, it doesn't apply. Personally, I didn't know it requires so much movement, but knowing how everything actually works, it will not be such a hassle if there is the will to push it through, just as they are trying with chat control. And you should obtain a second citizenship, even if you have one of the strongest passports in the world as a European Union citizen. Get a second citizenship just in case. I would really not recommend the renouncing for the vast majority of the European Union citizens, 99% of them for now, unless you see restriction climbing higher and higher, but always get a second citizenship just in case. If you want to see which are the best second citizenship for European Union citizens, I made several videos about this. I recommend that you check the channel or fill out the form in the description and we can get to work on it together.